welcome to another edition of Florida Talk Real Estate. We got you for 2 hours of infotainment. I see you out there, 92.1, 101.7. Thanks for being there. Of course, if you have your free download, your iHeartRadio app, we are worldwide. And if you like to get on your favorite device and do a little live streaming, go ahead and do that. Find us on Facebook, on YouTube. That's Florida Talk Real Estate on Facebook. Florida Talk Real Estate LLC, home of a ton of informational chunk videos there on YouTube, live streaming out the gates. Thanks if you're with us right out the gates. Of course, if you're interested in being a part of the program, questions, comments, concerns in the world of real estate, want to dive into a conversation at hand, bring up something on your own, you're more than welcome. Toll free. Dial in 877-927-6969. The first voice you'll hear, the melodious tones of my producer extraordinaire, my brother from another mother. There's Jimothy. What's up, my dude?
Hello, and good morning, gentlemen. Happy Saturday.
Happy Saturday to you as well.
Yes, sir.
Thanks for clapping. My man. Johnny C is me, your old buddy, your old pal, your air traffic control. Let's get your very important people on a Saturday. We'll start off with Mike Rauch. He's the mortgage guy from the mortgage firm. Also, multitasking with my headphone volume out the gates today. Thank you, sir.
I saw you struggling a little bit.
Thank you.
And then you were going to play hurt.
I was.
I saw that.
Yeah.
And I was like, you know what? I could do something.
Yeah,
I could do something about
that. That
this.
was awesome of you. You're like, you know what? I can step in.
That's why I'm a VIP.
Awesome.
VIP.
VIP.
Yeah.
Nice.
Well, good to Morgan.
And same to you.
And would we say happy Saturday? All right. Happy Saturday.
Happy Saturday.
Yeah. Why not?
Nice to see you.
Big Saturday today, isn't it?
I think it is.
Yeah. Why?
Yeah. I don't know.
Oh,
I like to get on the train, you know?
Okay.
You're like, it's a huge Saturday. I'm like, you kidding? Biggest ever.
Honey-do list. You got one?
I do.
Yeah.
I'm not today.
It's like constant.
Yeah, it's not
I feel
happening.
like it ain't happening.
I'm not doing that.
Tomorrow? Mañana.
I have some things I have to do on Sundays, like they just have to be done or they'll never get done.
Church?
No.
Okay.
You could do that any day of the week.
Oh, that's true.
Yes,
that's
you
true.
could.
Or night.
Yeah, it's true. But I have a little important things that I have to handle on Sundays, but I get those right out the gate.
Okay.
You know?
Knock them out.
Yeah.
Enjoy your weekend.
Come help me.
I would, sure. If you need it.
I'll call you.
You could bring me in for like bigger projects. If you got to sweep your floors or something.
Oh, yeah. Well,
I'm not. But you got to stain a deck.
Nice.
You need to power wash your fence.
Swap out a tranny.
Yeah.
Like that.
Yeah. Swap out. That's easy. How about rebuilding? That's the one that takes.
There you go.
Careful though, Mike. Johnny's got a big deck.
Yeah. Well, that's
yeah.
why Mike wants to come help.
Yeah.
Mhm.
He's like,
Oh, wow.
I want to try out this big deck I've heard about.
All right.
Okay.
You know what I'm saying? We got Ross Komarinetz over here, y'all. You can check him out live streaming as well. He's with Brightway Insurance, Juno Beach. Ross, how are you? Oh, you know what? I don't hear you though. That's the worst part. No, hold on. Jimothy's doing a little.
All right.
That's better?
Give it a shot now.
I'm doing well. How are you?
There
he
we go.
is. Good to hear you. Good to
All
see
right.
you.
You too.
And thanks for being here on a Saturday. Always, Ross. And of course, Jimmy D's here. He's our fearless leader. 14 years now, I've told you he runs a top producing Keller Williams team. It's the Florida Home Pros team. Keller Williams Innovations. Jimmy D, how you be?
Hey, good everybody. I screwed up and did not turn on the audio before because I screwed up, so we got to do the clap again.
Okay, wait, don't
have
look
a
so
choice.
defeated.
I don't really. I'm very frustrated today because I thought something exciting was going to happen, and it didn't happen.
It might still. You never.
Hasn't it happened?
No. So go ahead.
Johnny. 1, 2.
1, 2.
Do it again, Mike. You weren't on the camera.
Mike,
do it again. 1, 2.
1,
Mike.
2.
1, 2.
1, 2.
Your hands weren't on the screen when you were saying the 1, 2.
Yeah, we
It
need
was
the
just
clapper.
like these.
Gotta
Yeah.
have the clapper.
Pretty sure they were.
Okay,
clapper.
sorry about that, everybody. Can anybody let me know if there's a delay on the video and audio on Facebook and YouTube? We're trying to figure that out. I thought we had it solved today. It doesn't look like we did, but somebody let us know. Okay.
Please.
Hey, good morning,
Imagine
everybody.
how happy Jim's going to get when someone's like, "Yeah, it sounds good."
Oh my God,
It's
I can't wait
It's
for that
finally
day.
synchronized.
And,
Yeah,
but the worst part is be like, I don't know what I did.
Yeah, probably. Yeah, exactly. Well, thank you everybody for coming on the show. Thanks, Elizabeth. Thanks, Nate, for coming on in. You guys are big fans of the show. Thank you so much. Hope everything's going great for you on this weekend. We got a lot to talk about, guys, this week. The end of the year market update came out. So we kind of figure out really where 2025 landed. That's kind of big news because there's a lot of every county. Usually it's like, this is how it usually is. Port St. Lucie's on fire. Broward, Palm Beach, and Dade may be on fire or not on fire, meaning like really strong, but they're all the same, right? The three counties to the three metropolitan areas, Broward, Dade, Palm, is all the same. Every county was different this time. At the end of the year, everybody had a different experience. So we're going to talk a little bit about that.
I mean, there was no consistency between the 6 counties that you're looking at.
Well, yes, of course there's some consistencies, but there's a lot of things that were very different in each of them that kind of make it a standout stat in each county. So that's what we're going to talk about. We're also going to talk about Fannie and Freddie. We're hearing so much about, and we're going to talk about this with Mike, no credit scores to get a mortgage. Really? That's what people are talking about, like in the news. So we're going to talk to Mike and find out what's really happening with those headlines. Is it true or not?
I mean, that worked well last time.
He says it's working.
Yeah, he'd give you a thumbs up.
Oh my God, that would be awesome.
On everything working.
It was just one thumb though.
Yeah,
true. It wasn't 2 thumbs up.
Yeah.
We're talking about the syncing of audio and video for the live stream, which is why we clap. If you're just always on the radio and like, what are you guys doing? We're trying to make it streamlined for everybody, and I think it might have worked.
We hope. Oh my
2
gosh,
thumbs up.
really?
There you go.
Really?
There's 2.
There's
my
both.
gosh.
You want them both? They're
Oh,
both
Mike has saved the day. Now we
Mm.
can say it. Okay, we're going to say it.
What are we gonna say?
What we're going to say is Mike cured the clap.
Oh, so that's the next headline.
What kind of antibiotic did you give us, Mike?
Those people have been suffering for years. Years with the clap. Never
About
goes
time,
away.
man.
I hope this works. Oh
Actually,
my-
is the clap one of those that is curable? I think so, right? It's treatable.
Yeah.
It's not like the herpes that you always have or something.
The clap, the drip. I think they're all curable.
Okay.
Yeah,
Okay.
yeah.
Good. Glad
Yeah,
you knew
so-
at least 2 of them.
Okay, so thank you, Nate. Nate's saying that it's looking okay on his stream, so maybe we're getting there.
Mhm. And you know what? Reality, Mike, we can even get undetectable now,
Oh,
which is like essentially curable.
yeah. If you can't detect it,
Is it even there if
Pretty
you can't
much.
detect it?
Pretty much.
Right. Wrap up, baby.
Yeah,
Wrap
so how
up.
do they know?
One
What
time.
a racket that is. Like we're going to keep treating you. It's undetectable. We want it
undetectable.
to stay that way.
Yeah.
We're going to keep treating you for
Yeah.
however many thousands.
That's the
of
kind I
dollars.
prefer. I
Yeah.
actually have the undetectable. Tag.
1, 2.
What's there it is.
So we're trying to make this better and better for our viewers, because we know that the radio people, at least I do, when I was a big fan of the station, but I wasn't part of the station, and I'd listen to stuff. It's like I want to remember a commercial, or I wanted to remember something, and I'm getting in on my car, and then I get back in my car, they're not talking about the same thing I want them to talk about. This gives you the ability, like, to just go back to the YouTube or the Facebook channel. It's going to be really more YouTube. Facebook, it goes away after 30 days.
Right.
But on YouTube, it's going to be forever. You're going to be able to go in there and look at all the shows. They're going to be time stamps. If you don't want to hear our chit chat, you
Oh,
can get right to the meat.
no.
And or if you don't want the meat, you just want the chit chat, you just want your Johnny C fix, it's there. So it'll be really, really good. And also the other thing that's going to make a big deal is that the video quality. We've had a lot of people. There's so many people that have given us support on our shorties and stuff that have been going out there and giving us the likes and the thumbs up and all that. And it really matters that. So thank you so much. But now the video quality is going to get better and better.
Good.
The way we're doing it. So that's why we've been doing all this behind the scenes. It's worth all the mayhem. Once it's all done, the quality of the product is going to be way better.
It's also kind of fun for the audience to watch every week as we try to figure it out, like on the fly.
Yeah,
you
they're like,
know?
What
"Oh,
are
it's only
these
been a
both?"
couple years.
Yeah.
Good job, guys.
Yeah, like what are these bozos going to do this week?
Nice.
It's so true.
We're not clapping anymore, but we'll have something else. We can do.
Yeah.
I sure hope so.
Let me
come up with
tell you, there
something.
were many times I wanted to give it the finger instead of the clap. Right? I wanted to give it the finger. I was like, I can't take this technology
I
anymore.
mean, you've really pushed through and put a lot of effort into it.
I've been trying to do
A
this
lot of
really
effort.
since 2016, to be honest with you. The first time we went live, Mike, we were
Yeah.
in the other studio.
The
Yeah.
Wild 95.5
Mhm.
studio.
2016, how to go live. They were like, guy, but he brought us over and showed us. We lost everything. He came over and showed us, and we turned it on, and I think we got like 100 views. We were on for 5 minutes. We didn't know what we were saying. We were just practicing, and we had something like 100 views, which 2016, what? And he was surprised because he doesn't get that when he was turning his stuff on, and he was like, "Wow!" He goes, "People want to follow you," And that's when we started trying to do this. It's like I wanted not just to have it go on the radio. I want it to go where people can have access because we give great information. So can I tell you a funny story and then we'll get off of this? Okay, so I threw the YouTube channel into an AI system just to find out. As like, tell me, we're talking about the most important news that's happening in real estate every single week. Why aren't we getting any views, right? Why aren't we getting enough views compared to the subjects we're doing? So this is what the thing, it gave me a like 5,000 word description of what I could do to fix the channel. But this is the end. It says, in conclusion, you are serving your listeners a Michelin 5-star filet mignon meal on the top of a garbage can lid.
Interesting.
Which just means saying that all of us are given the most important information that's out there, really helping the customers or our listeners like help make decisions, have some fun along the way, right?
Right.
Help them understand what's going on in the market. But when we try to package the information to give it to them other than on the radio, it's the top of we're putting the filet mignon on top of the garbage can lid.
It is a unique presentation. You're not going to get that like at Okeechobee Steakhouse. You know what I'm saying? So, I mean, we might have found our lane. You have to separate from the pack.
Yeah, nobody else is doing that.
Right? Nobody else is.
Yeah.
How else are you going to get that 4th star?
Right.
I want 6.
You got to be different.
Hey, Ross, one of your fans is online right now saying Ross is a legend. So there we go.
Truly.
He is too.
Yep.
He is.
Yep.
He's even got his own nickname.
Yeah. So
No.
anyway, enough about the Ross.
There he is.
enough about that stuff. So the other things we're going to talk about is like no credit scores for Fannie Mae and Freddie Mac, really. And then Ross is finding out that he's noticing a lot of people may not be covered for what they really need to be covered for in case the disaster strikes. So we're going to talk a little bit about that. That's all about unaffordability with insurance and all that stuff. And we're going to get into that. First, if you don't mind, I'd like to do a couple of shout outs. Seems like we're going to talk about this later with Mike, but a lot of people have come out over the last couple of weeks as buyers, really looking to buy now. We had, and this is kind of the trend, and here's a real life example of stuff you read in the headlines. We have a guy named Robert who came to us. Mike, how long ago was it? 2021?
Yeah.
Right. So this guy, Robert, comes to us, big fan of the show. Thank you, Robert. And he wanted to come and he wanted to buy a home in 2021. Right. So he went to Mike and he was qualified, but he felt like what he was qualified for wasn't the kind of house he wanted. Correct, Mike?
Yeah. We actually had him pre-approved. He was shopping and he was at a, it's like anybody, you have a max monthly payment, right? Kind of based on debt to income. And so he just wasn't able to find what he wanted that landed him at that number. At that price point. Yeah. So now it here's 4 years later, effectively, right? And he called, I put out a mass email last week, my weekly email, and said, hey, there's a lot of down payment assistance out there and it's a great time to buy right this second. If anybody's interested, let me know. And Robert reached out. Haven't talked to him in quite a while. And he said, I'm really ready to do it now. My income has improved a lot. Went over to Mike. Mike got him approved. We're going to be meeting. We have the appointment set. I forget the date we're meeting because it was yesterday, but we're going to be meeting Mike very, very soon with him and his significant other, Terry. And we're going to start shopping. I know in the price point, he can find what he's looking for. He's looking in the acreage area, roughly. And so congratulations. Now, here's a perfect example. This guy's been sitting on the sidelines for 4 years, right? Four years and plus, hoping to buy a home at some point. And now this is going to be the year. That is going to be the reason, supposedly, why we're going to see changes of strengthening of the sales in the real estate market, supposedly. He might be a real life first example on the front lines of January of people that are like, I just can't wait anymore. I need to do something. I've been waiting and waiting for that 3% interest rate to come back. It's
coming.
Yeah. You think so, Ross? Some year, right? Some lifetime it's coming. So anyway, congratulations to Robert. We're also going to be meeting today, right after the show. This is going to be a good one. We're going to be meeting with Noelke and Vanessa. That's the one we talked about last week, that we're merging the files. Usually people get divorced and we're separating the files in my system. These people are getting married.
You're merging your
And
data set.
We're
Nice.
merging our database to two separate people in our database to one new family in
That's
our
awesome.
database. It's awesome. So we're going to be with Vanessa and Noelke. It's going to be a real consultation today. They know they want to buy for sure, but the big question is, and we're going to set up that search and get all that going. Mike's going to be the mortgage broker. I'm sure Ross is going to be the insurance agent, but he also has a big question. He owns a property now. And should he keep it and turn it into a rental, or should he sell it? And he doesn't really know what to do. And there's a lot of moving parts with that, Mike, right? Because it isn't just about, do I want to sell the house or not? If he sells the house, he might be able to do different on the buy end. He might have more choices on the buy end.
Yeah, I think the question is like, if he does sell, how does that impact what he can do on the purchase?
Right, and that's what we're going to get to. And there's no right answer. I mean, no wrong answer on this. It's whatever Vanessa and Noelke want to do.
Sure.
But we're going to analyze everything, and maybe it's going to be an awesome rental property, and really good cash flow, and it's going to be, very valuable. Or it might be, I'm making X amount of dollars a month profit. I'm making $500 a month profit, or I'm not using real examples on this, so don't think this is Noelke's property. Or do I make $500 a month as a rental, or do I take $100,000 now? Right.
Yeah.
So how many months would you have to keep that thing going as a profitable rental to make that 100? So you take the money and run or not. Now there's a lot of things in there because some people like the long-term income. There's tax implications on this. Sometimes you want to keep the property for depreciation, depending on your type of finances you have. So we're going to get over right.
He's got a low interest rate on the existing
super low
mortgage.
interest
He's
rate.
probably been in there 4 years,
Mhm.
maybe 5.
Wow, you have a good memory.
Yeah, I mean, I was involved with Noelke's
know.
purchase, so I know the timeline of it. And I'm sure he's got pretty good equity. I mean, I'm not sure how that developed.
If he didn't have the equity, then it would be an easy decision, right?
Right.
Then it's like, okay, I'm just going to, cash flow positive, and I'll just, hang on to it. But he does have good equity, and that's why it's interesting, because it can make the difference of what he's doing on his new place.
Sure.
But I think there probably is a right answer, Jim. But what we're not telling him what the answer is. We're just giving him all the information he needs so that he can make the decision for what's right for him.
Yep.
Right. And
that's
and
exactly
it's like, part of it is like, well, if you did sell it, you need a realistic estimate of what kind of proceeds you can expect. Right. Mm-hmm. And within a margin of error. Right. And Jim is very if he's not good at the audio syncing and the video stuff, he is definitely very good at comping homes and giving you a realistic idea.
Seller net sheet would be pretty spot on.
Sorry, Jim.
I could do that as a podcast guy. I'm great at comping homes.
He's an amazing real estate agent.
Exactly. It's so true. So Nate put this out. I put out a post yesterday because I found out that I was in the top 100 of all the 7,000 Keller Williams agents in the region, right? So that's a pretty big thing.
It is.
And I was trying to do Facebook posts because I'm not a techie guy and I really stink at it. And I put it out, and I wanted to put on the top why I was posting this, and instead it came out. I don't even know what I wrote, but it was very short, and it was just not something good. So what I want to tell everybody, I'm really humbled and surprised, to be honest with you. I'm in the top 100 of all 7,000 agents in the area, for Keller Williams. But really, when I found out about that, the first thing that came into my head wasn't about the personal achievement I got. Really, what it was about is how many people I was able to positively impact last year. There were so many conversations. I closed a lot of deals, obviously to be in that group. But how many people I talked to that didn't close the deal with me that I was able to help in other ways, getting them over to Ross so that they can get insurance things, getting them over to Mike for mortgages and refis, and understanding if a refi is a good thing or if HELOC's cheaper than getting to refi, right?
Student loans.
I just had a father who has a daughter who has massive medical student loan debt. They're being helped with Paul Krasker. How many people call up for probate and insurance and probate and title issues and chain of title stuff? And we can even contractors. And I had a seller yesterday desperately needed a plumber, and Within 18 hours after we found the problem, because it isn't like a leak, it was like a longer term problem. 18 hours later, I have an expert plumber in that field out there.
How much did you make from that last year?
From what?
From all the stuff you're talking about?
Oh yeah, $0. It cost me a lot of time. Sometimes I spend more time helping people than actually working on lead generation or other. Some people, I have this lady Dawn who has she's in the process of buying a house, not with me, okay, and she has polybutylene pipe, and I've been talking to her for 3 weeks now, trying to see if she's going to be able to close that deal. I've given her polybutylene experts for polybutylene pipes. Dawn had him come out and everything. She said she was impressed with it. Wasn't sure she wanted to hire him, so I gave her other contractors to see what they could do, and that's the kind of thing that the Florida Talk Real Estate team is about. So that wasn't really about my.
So she's selling, but she's not using you as an agent.
I don't know how I got in touch with her, or she got in touch with me, but this is the crazy thing. Last week, twice, I called up people that bought houses 2 years ago without me. They had called like on one of my houses, but just like a Zillow lead. And then they closed with another house. They didn't want my house. So I had no real relationship. They didn't know me or anything. It's just a Zillow agent, right? Or I'm not a Zillow agent, but they saw me on Zillow. And I called 2 of them this week, 1 3-year anniversary, 1 2-year anniversary. And I call them up. I go, hey, Mike, I know you don't remember who I am, but I'm Jim DePaola from the Florida Talk Real Estate Show and Keller Williams, and I want to congratulate you on your 2nd anniversary of the purchase of your home. I did not help you buy that home. You picked another agent that time, but I bet you your agent is not going to call you to wish you your anniversary on the sale of the home that he sold you. And they're like, wow.
They actually picked up the phone?
Oh, yeah, and they talked to me.
Wow, that's even more amazing.
Yeah, and
I
they're
think
like,
that's the real story here. They actually answered the phone.
Oh, I know. Right? Oh, Johnny knows.
That's the
Johnny
real
knows.
story.
But
wow, I thought this was a voicemail you're leaving for sure.
No, and they're like, they're really like, they're amazed. And a couple of them, one of those people late last year, got him over to Ross, right? I was like, hey, have you had your insurance checked in a while? No. I go, well, you got a newer house. Maybe you should go over to Ross and check it. So I'm even like, that's what this show is about and this team is about. And we want to continue it. And the way we continue is with your support. And we really care about everyone that calls or reach out, has needs or anything. We're all here for you. So thank you so much, everybody. Really appreciate it.
Thank you very much. Always remember FloridaTalkRealEstate.com. Know it, use it, love it, share it. You can change lives, including your very own, with the pros of FloridaTalkRealEstate.com.
I want to talk a little bit more, just to wrap up this segment. I want to talk a little bit about the National Association of Realtors stats came out, and we talked about it a little bit last week. 1.3 million agents now. I was wrong before. Remember when I said there were 2 million agents in the country? We went down to 1.5. That's what I was saying on the air a couple of times. I read that somewhere. Apparently, it's like closer to 1.5 million agents, and it went down to 1.3, which is still a big drop. But out of the 1.3 million agents, 925,000 of those agents last year did not do any deals at all. 0 deals.
Wow.
925.
Jeez.
15% of the agents in the country closed over 95% of the deals in the country.
That's crazy.
This is a very weird market, and it is a survival of the fittest market right now. The ones that are still standing and in production, those are the ones that really kind of know what they're doing, because if you don't know what you're doing in this market, you get 0 deals for the whole year, right? And that's not joking around. And I'm not saying that as a happy thing, just being real. Now, can you imagine if I was thinking about this. Can you imagine if you're a buyer or seller, you have no idea of the track record? There's a good chance that 9 out of 13 agents you talk to have done no deals in the last year. And hiring those people, I don't know if I would, I would have real question that. Everybody got to start out. I started out with 0. Everybody starts that way, right? And I groomed myself and trained myself over 10 years to be, a top agent. But that's because I worked every single day to do it. And I didn't care if it was a bad market, a good market, whatever the market is, that's the market. That's what I got to play with. And you got to make it happen.
You got to morph.
So people need to learn that, and it's okay to learn that. But, you also have to worry about protecting yourself to make sure mistakes aren't happening. In this market, marketing is really important. I had a property that was in the Jupiter Beach property is under contract now, the Airbnb.
Nice.
2 other properties in that neighborhood tried to sell while we were trying to sell, and they both went expired. I was able to generate 2 buyers for that property, right, in 60 days. One of the houses on the market 180 days, no offer. Same exact unit as ours in the same community. Why? The way that we marketed it, I put out some really good videos. I marketed the Airbnb, I think, the right way, and worked really, really hard to make it happen. And I don't think a person that has done no deals in the last year is going to be able to have that kind of level of intensity and commitment to get the thing done.
Well, I think
Or no.
I think you might have it flipped. I think the reason they have no deals is because they don't have the intensity or the know-how to get it done. I don't think it's the other way.
Yeah, there's some truth to that. You know, there was a customer I wanted to work with last year, and I really thought I was going to work with them, and then all of a sudden they just ghosted me, and they ghosted me for months. And I was like, why did they do that? And I really thought we had a good relationship, everything. And then I was following up with them like I always do, and I saw that they hired another agent, and the other agent has done like 6 deals in the last year. Now, 6 deals for last year puts him in like the top 20% of all the agents in the country.
Not
right?
bad. Still
Right?
making a
Yeah,
living.
still right. So he's still there, but the property's still sitting there. The photos aren't good. My photos would blow their photos away. The way that they have the description for the instructions for showing and everything, not good. And the other thing is that this house isn't moving, and he has on the listing that nobody else can advertise the property. Why don't you want other agents to advertise your property in a slow market? You have a button on the MLS where you can click. What can I let other agents? Right? Can I let other agents advertise my property or no?
How does that manifest? Like, so I'll see ads for a listing, and it's not
Mhm.
that agent's listing, but they're the ones promoting it.
So they're allowed to promote the listing if it says allowed to advertise, but they have to say what brokerage it's from. So
Okay.
they can't say, like, if you were at Remax and you were advertising a Keller Williams property, you'd have to say Keller Williams Innovation at the bottom.
Got it.
Why
Right.
could you ever imagine a scenario where you would click that nobody could? You wouldn't be able to advertise.
Yes, we've done it.
What's the reason?
Well, we've done it. When you're in a super, super hot market, right? You don't really need to do that, and you have more control of the content, right? Like the content that's being thrown out there.
Okay, but like this is a market that you almost like the realtors almost probably not even needed, right? I mean,
Well, who's
Yeah,
that
that
kind
would
of
be like
market?
the COVID market. You got 15
so far
offers in
from
20.
where we're at now.
who's advertising another person's listing?
When you say who?
Like you're saying, you're that box.
Meaning
So,
agents.
yes,
yeah, like other agents. So like, let's say young agents when they don't have any. When I say young, I don't mean by age, right? Newer agents. They don't have a lot of business yet or anything. So one of the best ways to generate business, Mike talked to one of the Keller Williams agents yesterday, Ryan, who's brand new. He goes out to open houses for other people's property, even other brokerages. Mike was totally amazed by that. And what he's doing is he's just trying to collect buyers so that he has people to talk to that want to do something in real estate right now.
Yeah, he's
Totally.
sitting open houses, not for people on his team, not for people in his office, not for people at his brokerage, but any listing. And I thought that was very odd. Like, as a listing agent, would I want some other agent from a completely different company doing an open house on my listing? I thought that was odd, but Jim says it's part of what
and in
agents
this,
are doing who are hustling.
And in this
Hustlers,
market,
yeah.
you do anything. You know, I got all these tools in the toolbox. I use them all depending on what happens. But that's a really important tool is to, like, when you're in a slow market like this, you got to just do everything you can in order to get the property moved and just keep it in people's mind all the time.
Sure.
Anyway, let's go ahead and take a break. On the flip side, I think what we'll do, Mike, is I think what we're going to do is we're going to start with the Depop, if you don't mind, Ross. I call it Depop. I don't mean of that. I'm sorry. I call it Depop because I got Depop in my head all week from doing those videos on you for the shorties.
What's
we're
it
going to
actually
talk
called?
about. I'm sorry. Depop is depopulation.
No, but what's
insurance.
it? Are you saying It's depopulation. That's the correct term. You're calling it depop, and
But that's
We're
not
not
what
gonna-
we're not talking about
about
depop at all. I just
Oh.
said depop for no reason. It's like I got depop, like mbop. It's like mbop in my head right now. Depop,
geez.
depop.
Thanks,
So-
earworm, everybody.
I know, right?
Sorry, I already hear it right now. Thanks, Tim.
So to get out of the earworm, when we get back, we're going to be talking about: are you covered correctly for your home? Ross has found maybe a little bit of a disturbing trend that you need to know about, and maybe you need to correct something in your insurance policy. We're going to talk about that next.
Well, we got lots to get into. Enjoy that in your head for a while now. Florida Talk Real Estate.com is the very valuable resource. I do encourage you to check that out. And if you're on Facebook and YouTube, hit the share button, hit the like button. You never know who in your life is looking to buy a home, sell a home. They're stuck with a home. They don't know what to do. Maybe they have a need in the world of real estate, and we have professionals in the field to handle all those needs and so much more. One click away at floridatalkrealestate.com. If you're old school, you like to pick up the phone, there's a hotline. Dial it, 888-973-7828. You'll find it at floridatalkrealestate.com. Fill out a contact sheet. Lots of ways to get in touch. If you need a professional, I'm sending you to the spot. It's floridatalkrealestate.com. Write it down, floridatalkrealestate.com. We're back in 4 minutes. Thanks for being with us every Saturday right here on Real Radio.
The visual aid you need for all the freaky stuff we talk about on the radio. Find it at realradio921.com. Here's what's happening with the weather on Real Radio.
I'm meteorologist Charlotte Carl with CBS 12 News. We're expecting a pleasant rest of your day out there. A mix of sun and clouds, an isolated shower along the coastline will stick around in the forecast. We have a rinse and repeat in the overnight hours. Temperatures drop back down into the 50s and 60s. In the afternoon, we get just a little bit warmer.
This report is sponsored by Think It Up. Think It Up is an initiative to activate student-powered, teacher-led learning projects. Students and teachers, how can you spark great learning experiences in your classrooms today? Join at thinkitup.org.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
This is Real Radio 92.1 and 101.7. Real talk for the Palm Beaches and the Treasure Coast.
1, 2.
1, 2.
1, 2.
1, 2.
This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
You can, absolutely. You're more than welcome. Toll free at 877-927-6969. Live on the 17th of January. We all have little coats on, little hoodies. Seems pretty appropriate. We have a little unusual weather through Florida. Although, discussing it last night at the fair, by the way, kicked off last night. I was like, I guess I'm freezing at the fair every year, so I guess it is kind of normal.
You went?
Kinda normal. Yeah, I like opening night.
Cool.
And then you go back again. Opening night's all about the walking around, checking out the animals. Go check out the maternity, see who's gonna pop. Be like, oh, you're gonna pop before you know it.
The
And
maternity.
The maternity is awesome. I love
boy,
it.
we don't get that in St. Lucie.
Maternity's great. And then
jelly.
I figured they retighten the bolts after the first night, so I'm always nervous the first night. Right?
And then we'll go back again, and then it'll just be all ride intensive.
Yeah.
So the first night, little food, check out a couple bands, check out all the animals and things, display, and then the next trip is just ride.
Did they have the heckling water dunk tank?
I didn't see it. I didn't hear it, and we did make our way through the whole thing, but it was a little chilly last night.
Okay.
Water.
Yeah.
Maybe, but I love the heckler.
Yeah.
The heckler's
Oh, he's the
great.
best.
Oh, I want that job.
Are you sharp enough?
I think so.
Yeah.
I'd be willing to give it a go.
Yeah. I figure he's got enough time under his belt. He's got anything he can pull.
I think I may border on like super offensive from time to time.
Yeah, you got to be.
That's the problem.
I mean, he does too.
True.
Sometimes.
True. That's the sketch part. Johnny C is me. Timothy's our producer extraordinaire. Hello. As always, thanks for everything, my dude. Mike Rauch, he's the mortgage guy from the mortgage firm. Evidently didn't go to the fair last night.
No, but I saw it.
Did you?
I drove by on Southern, and I was like, oh,
You're
fair
like, look
time.
at that. Look at that.
Yeah, fair time.
Nice.
Actually, I haven't been in several years.
What?
Yeah, I never was like a regular goer to the fair.
You don't find it exhilarating to be like, I'm going to get on this thing that was just on the turnpike 12 hours?
It makes me nervous.
Yeah?
Yeah, it makes me nervous.
That's exhilarating as
I've
hell.
also had a thing. I feel like I know a lot of the workers, travel with the fair, but I also always had it in my mind that they hire temporary workers from the building next door.
Yeah.
You know what I mean?
Yeah.
The next
I do
door
know.
building.
Yeah. They're on work release.
Yeah, they're on work release. They're coming over. And I'm like, I'm not sure if they have the torque specs.
I like to really mess with myself. I like to psych myself out big time and hold a little conversation with the attendant and be like, oh, this is the one responsible for our lives. Can't wait to get on this. It's gonna be awesome. I totally psych myself out.
You haven't had a problem yet.
Yeah. No.
Nice.
And again, plan on going again. So
you know what? Maybe I'll go.
You should.
Tiff, she might like that little date night. Go to go to the fair.
Yeah. So as I was saying, we kind of get into this like, oh, we're not used to the cold. And I'm like, yeah, I'm cold at the fair every year. We should be used to this at this time.
I was thinking about that too, because I've seen some of the radio personalities put out videos, and I thought about that. I was like, yeah, every year it's cold at the fair. They must hate coming to Florida for. I mean, it's you would think, right? We'll go to Florida. It's going to be warm and everything, but it's cold every year.
Every year.
I mean, but it's over now. I mean, I came out the house this morning. I'm wearing a hoodie, and it was like balmy. And I'm like, wait, what happened? Because I didn't like look at the temperature or anything. I just walked out expecting it to be cold still, and it's over. The winter's over.
It's over?
Yeah.
It came and went?
It's 65 degrees out right now.
Tell my hands, please.
Talk about the heckler. I mean, if he does get dunked in that cold water.
Cold.
Yeah.
Ross Komarinetz, Brightway Insurance, Juno Beach right here. You hit the fair?
I'm going to try to sneak over there on Sunday.
I love it.
Yep.
You do the rides?
I mean, I'd like to do the rides, but my daughter's a little young for them. But, I'll at least, 100% hit the Gravitron.
Inside or outside? Do you prefer the outdoor one or the indoor one?
The indoor one.
So they actually have the dueling outdoor ones, right? And we'll hit them both because I guess they're different.
Why not?
Right?
Well, because, I guess it is. Well, on the indoor one, you're kind of at a little bit of a slant. Right.
Yes.
And that one you're more straight up and it goes up and down.
Yeah, you stand straight up and it tilts in the air so that you get that like straight down feel.
Yeah, and then it also slides up and down too, right?
It doesn't. You don't slide in the outdoor one.
Oh,
no, you don't.
I thought
slide.
it's little. No,
what do they call it? The
Gravitron's the inside starship looking one, the UFO looking one.
And it spins around and you stick to the wall.
Centrifugal force. Yeah, and then you
why
can like
isn't it
spin
called?
around.
Why are they invoking gravity? It's not.
I don't know.
It's centrifugal.
It's centrifugal.
It's a G-force.
It's a G-force.
A gravity force.
Yep.
Does the floor drop so that you're actually just only pinned up against by centrifugal force?
That's the idea.
Yeah.
In the indoor one.
The indoor one, yes.
Yeah.
That's the gravity. You don't have gravity.
Even if the floor doesn't drop, you can always pick your feet up. Like bend your knee.
You
right?
sure can. Yeah.
That's one where it slides up. So then essentially you're not touching the floor. And
and then you can spin around and go head down.
Yeah.
Always fun. Jimmy D is looking forward to the fair. I can see it in his face. He runs a top producing Keller Williams team, the Florida Home Pros team, Keller Williams Innovations.
I haven't been to the fair since a while, right?
Yeah.
The last time I was in fair is Andres, your son, like he brought two of his friends and we went to the fair and he was telling everybody how he's going to go on all these rides and everything. And he was saying everybody was going to get sick and everything and that, he was going to be the king. So we went there, we ate a bunch of crappy food, good crappy food. And I don't mean that in a bad way. Like bar food. Yeah.
None of it's
fair food.
It's veggies. It's deep fried.
Deep fried veggies. Yeah. I put out when Ross put out, I think it was Trident. They put out Title put out something about the fair. I said, time to get my, deep fried donut burger, right? Remember that? But so we start going on these rides. I didn't go on that many. After like 4 rides, Andres is the one barfing in the garbage can. The other 2 kids are fine. I thought that I was like, that's what you get for being so cocky.
At least he made it to the garbage can.
Yeah, that's true.
Yeah,
I felt bad for he was little at that time. He was a little kid, but he was throwing up multiple times. He just couldn't stop. I was like,
It's mortifying for the person that does it on the ride.
Oh,
horrible for anybody near him.
Well, the people behind the cars behind you.
One of those kids, Andres' friend Sammy, he moved up to like St. Augustine area or something. He's like a very successable real estate agent right now up there. Yeah, I'm somehow on Facebook friends with him.
Okay,
and he's doing really well in real estate up north. I don't know about that, but he's really. It seems like he's Andres' agent. He's like a top agent out there.
Good for him.
Yeah.
Have you looked at his stats, or are you just going by his Facebook profile? Because he might be advertising other people's. He's like, I got a $5 million listing.
Yeah,
right?
exactly. Like
on the coast, right? But it's someone else's.
Because it's okay
listing.
to advertise.
Yeah,
because it's okay to advertise. Yeah, no, it looks like he's really
cool,
and he's also a poker player apparently.
Nice,
which I thought was funny. But anyway, welcome everybody. We want to get into insurance. We're always trying to keep up with the trends of what's going on. Florida insurance has been, quote, a crisis for a long time. I just read recently, I have to do some research on this, Ross. Apparently, Florida is not the highest price for insurance anymore. Did you know that?
I mean, I wasn't aware of that specifically, but I am noticing the premiums coming down.
Yep. I The problem I have is I don't remember what state replaced us yet, so I'm going to do the research and tell you next week. But
Probably California
it might have been Colorado. I think I was
or
surprised.
Colorado or something.
I think it might have been. I think it might have been Colorado. I was like surprised, like, I wouldn't have thought it would. I know there's been a lot of fires out there and everything, but I thought, wow.
California caps how much they can charge, right? And then they supplement through state, kind of like
citizens.
Yeah,
kind of
sort of like
a
kind of
hybrid of that.
Yeah, so maybe California is not the one because I know they cap it a little bit.
My brother just got a 21% increase in New Jersey.
Ouch.
So
yeah,
it might be them too.
Oh, it might have been that. I might have been a northeastern state, and I was like, wow, where did that come from?
Oh.
So might have been New Jersey. I'm going to check it out. It'll be interesting. But right now, so anyway, that's a little good news for Florida is that we're going down, not up.
Yeah, we are.
But Ross, as he's going through these policies, he's noticing that some people may be part of this disturbing trend. There's so many people that are paying so much for home insurance. I just talked to a guy yesterday who came and looked at a house with me, and he said that the house he's in now in North Palm Beach, he decided to dump his insurance completely because it's cash, but it would have been $25,000 a year to insure the house. Ooh. So he's like, I'm not paying $2,000 a month to insure the house. But anyway, Ross, what were you finding out as you're going through this, and what's the teachable moments in all of it?
So recently, I don't know why, but it seems like when we're getting people calling in asking if we can help with their insurance. Our first step is to ask them for their current declarations page so that we can start off with an apples to apples quote, just to, hey, do we have a rate essentially better than what you're paying now? Okay, then we can build from there, make recommendations. But one of the things that we're seeing a lot of the times is when we're getting these declarations pages, the dwelling coverage is extremely low. And so what is the dwelling coverage? The dwelling coverage is probably the most important part of your policy because that's what your actual house is insured for. So if your house burned down, that's how much money you get to rebuild your house. So the dwelling coverage is based on the estimated cost to rebuild your home. And so kind of when we're talking to somebody and we're going to, hey, they're telling us they're going to send us their declarations page, we'll at least get everything started in there. Just type in, an estimated cost, and then we'll go in and actually do a replacement cost estimator. That way we've got a number. And a lot of the times we're seeing, our numbers be significantly higher where, we're coming in somewhere, the real replacement cost is about $450,000 and they're insured for $267,000.
Oh,
yeah.
Oh,
yeah. And I'm seeing
how does the bank allow that? Doesn't that feel like
we trust the agents, to not underinsure. So there's a little bit of trust factor. So we basically say, hey, Mr. and Mrs. Insurance, at least initially, when we're doing the initial one, just confirm that you're insuring at a full replacement cost. And they just essentially, we used to ask for like some documentation, but then there was some, they're like, okay, just if the agent says,
wait, you want us to prove it?
Right. Yeah. Can't just throw out a number.
We're going to make that illegal.
Now, what I don't know is how do they monitor it every year moving forward?
Right. Doesn't seem like they do.
Maybe they don't.
So, I've seen sometimes where the mortgage company has in the past sent out a letter that says, hey, you may be underinsured.
Yeah.
Compared to like what your loan amount is. And typically you just turn around and send them the checklist of coverage.
Oh, okay. So loan amount. That you just said the key word right there. So if they feel like they're covered for their
that's
amount,
all they care about.
They care about.
That's all they care about.
Yeah, they don't care if you're rebuilding as long as they get their money back, right?
I don't know if that's necessarily true. The reason we want it fully insured is because the home, regardless of the loan amount, the home is the security for the loan.
It is.
And worst case scenario, if it has to be foreclosed or whatever, then
they
want the full value, right? They definitely want the full value of the home. So, but you're right. I don't know how they monitor it year over year. It's got to be something to do with the loan servicers who renew insurance. Maybe they have some sort of mechanism.
That's when they're getting it, is that renewal. When they notice it. But
it's a problem for a homeowner because if you have a major loss and the home basically has to be rebuilt, so things like, floods, right, or
Well, flood's not
hurricanes
included, but hurricane or fire,
tornado, right? That tornado, you'd be like, huh? But yeah, we just had one roll through about a year and a couple months ago.
So you have different mechanisms that you can tweak through the policy to save some money, maybe deductible for hurricanes, right? One way. Is this a mechanism to make the policy less expensive?
Oh yeah. I mean,
so is this a conscious choice for the consumer?
I wouldn't say it was I don't think it was a conscious choice for the consumer. Just because I'm noticing the trend being mostly on kind of, I would say, older like policies that were originally written on with Citizens a few years ago, and now they're being depopulated. And so, up until I say recently, probably within the last 3 years or something, 4 years, Citizens wasn't super strict on their replacement cost estimators to determine the dwelling coverage. So whatever you put in is what you're going to get out, right? So if you want to make it look lower, you can, do inputs that make that number come out lower. And so we've always been, whatever it is, do it the right way. Like if we want to make sure that if anything happens, that we did it right. And so we don't see it a lot with our clients, but we're starting to notice it. And it's not only like a total loss where you'd come up short, but all of these policies have what's called an 80% coinsurance clause, meaning that if at the time of a claim, if your house isn't insured to at least 80% of the actual replacement costs, the insurance company only has to pay you the amount of that claim. So for instance, if you had a $50,000 water claim and your deductible is $2,500, you should expect to get $47,500. But at the end of the day, if you're only insured to 60% of the replacement cost, the insurance company only has to give you 60% of $47,500.
Ouch. So
Which
not
that's
only is there
probably
like
a $20,000 gap right there.
So when you're doing these quotes and you're like, well, wait a second, your replacement cost is way undervalued. Not only do you have kind of like an ethical dilemma there, right? Because you're trying to basically say, hey, I'm going to get you a quote. Let's write a new policy, but you can't insure for what you're insuring for. Like it's not even close to the number.
I try to have that conversation, hey, thanks for the opportunity, but I mean, I can't come close,
because like to Johnny's question, he's saying, is it a conscious decision? It might not be the homeowner who's making that decision. It might be the agent who's just like, oh, I'm going to get this policy. I'm going to make it the absolute lowest number possible. So I'm going to put in a replacement cost that's half of what it should be.
Yeah, just to get the business. And unfortunately, it's leaving the customer in a lot of peril because they don't know what they don't know.
Because they're looking at the shiny object.
I guess that's a reality.
Yeah,
I always just assume everybody's the way Ross is. And I guess I shouldn't do that. That's the facts. FloridaTalkRealEstate.com.
I mean, the good news is we've been able to give somebody better coverage, same premium, so that was kind of a win. But most importantly, we're at least educating, we're telling them, hey, we can't help you premium wise, but here's why, and here's what maybe you should do on your current policy.
All right. So you're seeing it predominantly, and I'm just making sure I'm following, on the people that get depopulated from Citizens.
Yeah.
So when you get depopped, here's a carrier that's within 20%, and it's kind of apples for apples as far as coverage. So if you just get depopped and you're not paying attention, you very well could be underinsured at this point. That's kind of what you're telling me.
Yeah, because I mean, if you wrote if you got your dwelling coverage on your policy written, 5 years ago, that number hasn't changed that much, if it's changed. So not only were you probably pretty underinsured 5 years ago, but because that number hasn't changed and all those costs have gone up, now you're really underinsured.
Way underinsured.
Yeah.
Can you so the reason you get depopulated is because there's a policy out there that's within the 20% margin, right? Of what Citizens is offering. But that's based on the lower replacement cost. So can you go back to Citizens and say, hey, listen, I've shopped this with a real number and I'm now outside of that 20% threshold. I want to stay with Citizens.
No, because then you would have to do that same thing on the Citizens policy.
So Citizens would then you'd have to do a new RC.
It has to be
replacement
apples
cost
to
number.
apples. Like if you're going to try and
Yeah.
qualify for Citizens, everything has to be apples to apples, rate wise. So,
Jeez,
yeah,
tough one for people.
And are you still seeing? Are you still seeing that even if we're going to increase the coverage for the replacement cost, where people are still in a position where they're getting better coverage but saving money? Or is that not quite converging yet?
I have seen that. Yes. Yeah, absolutely. But that happens a lot. It used to happen a lot, when everything was competitive.
Right.
We were, somebody, it was probably $1,000 more, couple, or we had somebody that we were able to, actually probably save them $200, same coverage. That's great. And then somebody else who was like exactly the same. But we have been able to get better coverage and keep the premium pretty close,
comparable.
Yeah,
so I think
close.
That's all we could ask for, and it shows you how the industry has gotten better over the last couple of years. Because if you're like, well, I want to make sure I'm insured properly, but you're like, okay, well, it's going to cost you $3,600 more a year. That's a rough spot for a lot of people.
Yeah, no, absolutely, and I mean at that point you're really just satisfying your mortgage, because there's a lot of gaps in there.
Right. Interesting. So if you were depopped, you definitely should be reaching out to Ross with a deck page, a declaration page, so he knows exactly what you're dealing with and find out what your options are, because the odds are very good that you don't know what you're looking at when you look at your declaration page. I'll speak for myself. I'm just going to say,
what's your dwelling coverage?
I'm going to say way under. I have no idea.
Exactly.
I'm going to say
exactly.
Way
you have no idea.
Yeah, because I got depopped and just left it.
So can I say, so what would have happened if when that house hit Johnny's, when the car drove into Johnny's house, right? What happens if it actually really drove through the house and it was severely damaged? If he didn't have enough coverage, that would be your example of $47,500, right, Ross?
Well, that's a tough example because the car insurance would have paid his damages.
So if he was
an
uninsured driver.
What if the helicopter dropped on his house?
we're jinxing Johnny, all this crazy stuff.
But yeah, if he would have been underinsured, if he would have been insured for less than 80% of what the actual cost to rebuild the home should be, we would only have to pay that amount of the claim.
You mentioned when Ross was talking about it, I instantly thought about auto work and how so many people, when things got tighter and tighter, the uninsured motorist is one of the first things you just cut off your policy, which is tragic, but I know many of us did it. And I was thinking if the consumer was maybe just trying to save as many pennies.
So there is
possible.
no uninsured motorist property damage.
Interesting.
Huh.
Good to know.
Yeah.
In Florida.
Who we got on the line there, Timothy?
We have Steve checking back in with us. He called a couple of weeks ago asking about the Life Changer loan. And if I remember right, Mike was not here that week, right?
Yeah, that was and again, we found out that was a commercial that he's hearing on Real Radio.
Yep.
Yeah, and it's more of a brand name than a format of a loan.
Right.
That's just that's the brand name. But let's get him on and say hi.
Hello, Steve.
I'm sorry.
Welcome back to Florida Talk Real Estate.
Hey, how you doing today?
Doing good, Steve. How are you?
Good. I was just checking in and get some opinions on that loan. I never got a call back, so I was just wondering what was up.
Oh, I'm sorry, Steve. Maybe Jimmy gave me the number and I didn't call you back. It's my fault. I'm taking full responsibility for that, Steve. But Mike was gone that week. So Mike, he had a question about this product called a Life Changer loan.
I think it's again,
and I don't know if it's a brand name, so I'm not trying to talk about a specific company. But do you know anything about it? It almost sounds like a reverse mortgage kind of thing.
I'm looking. I haven't heard of that before.
You haven't heard of it, Steve? Could you describe it again?
Yeah, Steve, give me some basics.
I guess basically they give you like 80% of equity on your home, and then somehow you use they give you your own bank account and your money, everything goes into that account, and the money is used towards the loan every night. So you don't pay interest up front. You pay it all, whatever the interest is on the end. So you pay your house off in like 5-10 years instead of 30 years.
Okay, so I think I know what this is. Something where you essentially run all your bills through a home equity line of credit, including your mortgage payment, and there's some sort of mechanism for paying off a loan faster, paying less interest, or something like that, because the way the interest is calculated on the home equity line is different than the way it is on a 30-year mortgage. So, I've encountered
a low interest.
Yeah, I think if interest rates are equal, let's just say interest rates are equal, the question is, does it make more sense to just throw extra principal at your loan to pay it down early, or to use this sort of mechanism? And when I looked at it before, Steve, just like a kind of like a cursory, not super in depth, because something caught in my brain is like, why not just, pay down your loan early, the extra payments? And maybe, I haven't looked at it super in depth, but it seemed like if you were super, super, super disciplined about going about it, meaning you had to really control your spending. You had to like be in a super strict budget to make this effective. Maybe there's some slight advantage as far as the way it calculates interest. But if you were equally as disciplined at not overspending and having extra money to throw at your loan, it was kind of like 6 of one, half a dozen of the other.
And the difference is, if you go into the loan he's talking about, you have an obligation every month, whether you can afford it or not. But the other way, where you decide how much you're putting in, if you have a tight cycle, like, you could say, I'm not going to make an extra payment this month.
Sure. If you're voluntarily like paying your principal down fast, the other system, I think it's just easy for it to get out of hand, and then all the savings that you're anticipating go away. And it's all about personal discipline and spending. Yeah. So I think maybe there's a slight advantage interest rate wise because of the way they calculate the interest, and
it's all based on how much you owe, right? So the biggest benefit for those that could put as much cash flow into it initially, right? Because you want to make sure there's as much cash involved in that as possible to keep the interest rate low.
It had everything to do with the way the interest is calculated on one loan versus the other, right? So by basically running all your expenses through your home equity line of credit, you're avoiding interest, including your mortgage payment. You're avoiding interest payments on the home equity, and it's a timing thing. But I could see it getting out of running away from you very easily. And therefore all the advantages gone.
Discipline and constant cash flow are going to be necessary.
And if you were that disciplined and you just really reined in your spending and you really concentrated on paying down your mortgage, like you could achieve most of the same thing.
So Steve,
you're paying principal up front instead of it at the beginning, you're paying it at the end, so you're paying less interest. And I got 2.75% interest rate. So I don't know if I want to lose that or not, but if it
it's not that you're losing it
earlier.
No, because you're not really the idea isn't to pay the interest on the home equity loan. The idea is to not pay interest on it. Right. The way that you're utilizing those funds, because you basically use it and then you pay it back. Use it and pay it back. So you're not paying interest. But you're comparing that now with the 2.75% interest on your mortgage. And it can get away from you if you have a rough month, or if you have a rough series of months, and then all the benefit of it has gone away. So,
this is what I would recommend. Steve, first of all, I apologize for not calling you back. Okay, so that's very unusual for me. Second thing, if you can leave your number again with Jimothy, I'm going to have it. Might call you on Monday or Tuesday, whenever he can get to you, and talk about this off air to find out the right decision for you. Is that okay?
Okay. Yep.
Awesome, man. Steven, again, I apologize.
Thank you very much for being out there and your patience as well, and understanding. We appreciate you very much. 877-927-6969. Toll free in the studio. You're more than welcome. Let's do a reset. We'll come back and talk about
end of the year market update. Very surprising stuff.
Lots to get into. An hour remaining on a Saturday. Thank you for being with us. Maybe you're live streaming on Facebook or YouTube, or just listening on your free download, your iHeartRadio app, tuning in on the old terrestrial radio. Thank you very much for being with us. We got the locker room an hour from now. We'll get you there before you know it. Always remember, Florida Talk Real Estate is a .com. If you're looking to buy a home, sell a home, you're stuck with a home, you don't know what to do, if you need professional guidance on anything that touches the world of real estate, we got a pros for you. FloridaTalkRealEstate.com. We call it the one-stop real estate shop for a reason. A team of pros, experts in their field that work cohesively together, experience it all. FloridaTalkRealEstate.com. We're back in 4 minutes. Thanks for being with us every Saturday. Florida Talk Real Estate right here. It's Real Radio.
Think we're just in your car? Think again. Anytime, anywhere. Tell your smart device to play Real Radio 92.1 on iHeartRadio. Here's the latest with weather on Real Radio.
I'm meteorologist Charlotte Carl with CBS 12 News. We're expecting a pleasant rest of your day out there. A mix of sun and clouds, an isolated shower along the coastline will stick around in the forecast. We have a rinse and repeat in the overnight hours. Temperatures drop back down into the 50s and 60s. In the afternoon, we get just a little bit warmer.
This report is sponsored by Compassion International. Compassion sponsorship means food, healthcare, education, and most of all, being known, loved, and protected. There are thousands of kids waiting over a year. End their wait. Sponsor a child with compassion today. Text the word radio to 83393.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
From the Anajar and Levine Accident Attorneys Studios.
Have you been in an accident? Call Anajar and Levine Accident Attorneys at 1-800-747-FREE.
That's 1-800-747-3733.
Real Radio 92.1 is WZZR West Palm Beach, an iHeartRadio station.
Make us the #1 preset on your car radio and on the free new and improved iHeartRadio app. Listen for all your music, radio, and podcasts. Free never sounded so good. Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Yeah, you can dial in and do it if you'd like. Question, comment, concern in the world of real estate. If you'd like to be involved in the conversation at hand, toll free at 877-927-6969. Of course, if you're not comfortable on the radio, always remember FloridaTalkRealEstate.com. Access to the entire team. Jimothy's our producer extraordinaire. What's up, my dude?
Hello. I want to be involved. Can I call?
You can.
Okay.
Yeah, do it.
Thank you.
You're more than welcome.
Johnny.
Join into the conversation. Good morning, as always, my friend. Johnny, that's me. Your old buddy, your old pal here at Traffic Control. Let's say hi to Mike Rauch. He's the mortgage guy from the mortgage firm. Hello, Mike.
Hello. Yes. I think if Jimothy calls in while he's on mic, we're going to have the sync problems all over again. It's gonna, the echo, the sync. It's going to just, we're going to go back to the dark ages.
I don't want to point it out, but we didn't clap.
I like this guy.
That's
party.
okay.
Do we need to clap?
Nope.
I didn't hear it. I didn't hear it clap.
We tapped before. Yeah, we tapped at the second break. So
yeah, so we double tapped the clap already.
Mm-hmm. All right.
We had to do it at the end.
Ross likes the clap.
Now you're just taking the clap is now prophylactic. Right?
It's pretty much.
Just in case. Just in case.
Yeah. It's not that I don't trust you. I just don't trust
I love it when doctors say that, right? They'll do that with your antibiotics. They're like, but it's a virus. They're like, yeah, it's prophylactic. Okay.
No kidding.
We're just covering all our bases.
Yeah.
Yep.
Take that from a doctor.
That's it. Right. Hey, I follow the lead. You know what I'm saying?
Do you?
Yep.
Which way? Okay.
That's what you're telling me, Doc. That's what I'm doing.
Oh, yeah.
I'm going to use two. I'll double.
Do what I say.
Yeah.
No, don't do that. That's extra friction. Cause a tear.
Doesn't go well.
No.
Wow.
Tear.
What are you tearing?
Yeah. What are we tearing?
Woo.
Watch out.
Achilles.
This is Jim's definition of getting right into the meat of the stuff.
Yeah, this is why.
Jim's like rolling his eyes.
He's like,
I'm
not.
Here we go
I'm
again,
not.
guys.
Glad we didn't clap. Ross Komarinetz with Brightway Insurance, Juno Beach. How are you, my friend?
I'm doing well. Happy Saturday.
Oh, happy Saturday to you as well. And Jimmy D, there's Jim DePola, our fearless leader. Top producing Keller Williams team that he runs is the Florida Home Pros team. You'll find him at Keller Williams Innovations. What's up there, Jimmy D?
Hey, I'm doing good. Happy South Florida, everybody. Welcome to the show again. We're going to be talking about the end of the year market stats. They just came out on Thursday. So this is from the Florida Association of Realtors. So these are all the legitimate stats that they bring out every single month, almost like the Freddie Mac report or Fannie Mae report. I can't believe I just said Freddie Mac.
No, it is Freddie.
Oh, Freddie Mac report.
The
I'm having a very bad day today.
Wait, the rate chart that we look at
every single week.
Thursday to Thursday.
Freddie. Yeah, the Freddie.
That's Freddie's report.
Yeah, sorry.
We haven't talked about it, but it went down.
Well, we're going to get there. We're going to get there in this stuff. We're going to get here. So what I want to do, though, is recap what happened last year through the stats because we have a full 12 months, January through December of 2025. And then we're going to kind of project a little bit about what everybody thinks is going to happen as we go on.
Here's
some
comment,
highlights.
Jim. This must be a new listener. He goes, "It just got here. What's the topic of conversation?" And we were talking. It is real estate. Whatever that commenter is, it is real estate.
What we're going to be talking about right now is the end of the year market stats for Southeast Florida. So this is what happened last year and what's going to happen this year. There's a lot of misconceptions out there, and there were a lot of surprising things that happened in this last report that we didn't see the rest of the year. So I thought it was kind of interesting because we don't know if it's going to turn into a trend. So let me just do some summaries, some fast facts, and give you guys a quick quiz, okay? So the first question is, in December only, not for the whole year, but in December, between Palm Beach County, Miami-Dade County, Broward County, and St. Lucie County, and Martin County, the 5 counties, okay, which had the hottest sales growth, meaning the number of sales, the biggest increase in sales from this December compared to last December? Which county had the most sales, like compared to the year before?
Martin County.
I was going to say St. Lucie.
What do you think, Ross?
I was torn
staring
between.
At my screen with all the answers.
No. I was torn between St. Lucie and Martin, but I'm going to say St. Lucie.
Martin County wins. Ding, ding, ding. Now, why did you say Martin? I think you know. I know why.
He's biased.
We talked about it a couple of weeks ago. It's they don't have a lot of sales, but they had enough.
You're so smart.
Yeah.
You're the best man. He learned so much.
Paying
It's
attention.
pretty amazing. That's exactly it. Martin County, they have so few sales. Sometimes they'll have 50, 60 sales in 1 month.
Right.
So it isn't much to take 50 sales and increase it by 30%, which is how much it increased compared to last December, 30% increase.
That's like some of those agents who already in 2026 have doubled their volume from last year.
Yes, by doing one deal, right? Actually, infinity. When you go from 0 to 1, that's
they might
infinity
mislead
increase.
you, but they don't lie.
1 to 2 is double.
Yeah,
right.
that's
0
right.
to 1 is infinity.
Infinity increase.
And then when you go 1 to 2, you like, bummer, I went from infinity to 50%. Or
actually, you can't double 0. That's right. Oh my God.
So the second, there's only 4 of these, so I just want to get through them. Most expensive median price. So at the end of the year, which county had the most expensive or the highest median sales price for single-family home in the area? Which was it? Broward, Dade, Miami, St. Lucie, Martin.
Highest median?
Median sales price.
Dade.
It's got to be Dade, right? Dade's always
660.
highest.
660 for Dade.
But it's close, right?
Broward Palm Beach County is 620.
Okay.
Palm Beach County is 620. Broward County, I think, is 605, but we're going to check in a second.
We beat Broward?
Huh?
We beat Broward?
Yes, we beat Broward this time. What do you got against Broward?
I love Broward.
Best value for buyers. This is kind of easy.
Best value?
Where do you think? So that means, like, what's the cheapest median sales price? Yeah, $395.
Mm-hmm.
That's also pretty misleading.
The peak
they're
was
closer to Timothy.
That's true. Way closer.
There's the value right there.
The peak for St. Lucie was 405. It's now 395. Okay, and quickest. Which of the 5 counties has the fastest time to contract? So that's like kind of like days on market. You put the house on the market. Which one has the fastest median number for getting it under contract? How many days?
Palm Beach, Holla.
Palm Beach. Martin. You like Martin?
Palm Beach.
Palm Beach, Jimmy?
I would say Martin. I'll lean that.
Martin. Okay, the answer is it's tie. It's Palm Beach and Miami-Dade County. That's 45 days median days on market. You know, it's always surprising about that 45 days on market. We talk about that. I don't know if you noticed, but during the height of the frenzy, the lower the crash, we've been somewhere between like 7 days on market and 55, 60 days, not even a 60, 55 days on market. And we've never really hit that 60, 70, 80, 90. But if you take the average thing, the average days on market, not median is half is more, half is less.
Right.
I looked at a house yesterday, 1,023 days on market.
Oof.
So like there's 45 days is very misleading is what I'm saying in this type of market. Where in a super fast market, this number is pretty gives you an idea of the flavor of the market. So let's go into a couple other things for highlights, and then I'm going to talk about some things I noticed. Martin County was the standout because of the increased home sales in December. I don't really think that's a big deal. Palm Beach County also saw a pretty big increase in December. Actually, December was a relatively strong month compared to the weak months that we had this year, right? So Palm Beach County, December over December, we saw a 23% increase in the amount of sales. St. Lucie and Broward saw a 16% increase and 10% increase. So December was a very strong month compared to last December, but last December was down 15% compared to the December before.
Mm-hmm.
So we're just kind of coming back to where we were. It isn't really an increase. It's just coming back to maybe a little bit normal. A couple other things to notice about what happened at the end of the year. Palm Beach County, the big news in Palm Beach County, we didn't talk about this much, is how many multi-million and million-dollar homes sold in this county. In December alone, we had 311 homes closed that were $1 million or more.
Nice.
So for total volume for sales in Palm Beach County, this December, we saw a 56% increase in the volume of closed sales compared to a year before. So just those 311 homes brought, over $311 million to the sales. This year in December, we closed $1.7 billion in closed transactions, total transactions. In December, that's, like I said, 56% higher than the year before. That's a pretty big deal. Palm Beach, the Palm Beach market is really the big news down here because that's a completely different world than what we're experiencing for middle-class homeowners that are looking about affordability. It's
you mean
really
Palm Beach Island?
I'm talking about Palm Beach, yeah.
Yeah.
So
you
now,
mean like $90 million isn't really a
No, it's Palm
average?
Beach. I take that back. It's Palm Beach County, Mike, because the 311 homes weren't all sold in Palm Beach. It was the whole
you've got
county.
like very nice country club style communities, Boynton, Boca, right? Like
almost every city, if you think about
they
it,
all have
almost
these
every
nice,
city has some really, multi-million dollar or $1 million plus neighborhoods. Now, a couple other things. Pricing stability we've been kind of stable, and the pricing stability, we're not seeing people asking crazier and crazier prices as they list their houses. They're coming more in line with what's happening in the market. They're getting a little more realistic, and but we are still seeing a slight cooling. It says Miami-Dade and Broward County both saw minor dips in the median sales price for December. The 660 was a 2.2% decrease for Dade County compared to a year ago. So that wasn't like a high or anything. That was just where we landed this year. And 0.9% decrease in Broward County's property value, which was 614. So 620 in Palm Beach County. In Broward.
Was the day? Do you have days on market month to month? Did that
45?
But I know that you're saying it stayed for.
That was 45 days on market, was actually a little bit of a decrease compared to the year before. Let me look it up. Hold on.
That's median, right?
Yeah, this is median.
I'm trying to get a feel for because we were kind of in the trenches all year, and at Jim as a listing agent in the trenches, and maybe not with your listings, but you were aware. It felt like days on market was longer. It felt like price reductions were more.
So, for example, Broward County median days on market last year it was 40 days. This year it's 50. Okay. So Broward and Miami were 45 days on market. Broward was 50. Okay.
Yeah.
And that 50, it's about 10 days more, which is a 25% increase.
Okay.
Right. So we're seeing it. The market is not picked up speed. What's happening is we're seeing a flattening out, and we're still seeing a decent amount of activity. It isn't as dead as some people are making it sound. We closed in all the big main counties, we closed about 1,100 homes in each county. And for each county, that's about what we saw for expected for the year. Each county had a couple of months where, not in a row, a couple of months were under 1,000. And once in a while, some of the counties hit 1,200 sales, right, as opposed to under 1,000. But we're closing out between 1,050 and 1,150 in all these counties, not including St. Lucie because it's too small. So what we're seeing is that we're chugging along. I call it a very blah market. There's nothing really to talk about. And you know what I thought about when I went through all these stats for the year,
there
guys?
goes the show. Nothing to talk about.
No. It's that what we should talk about is this is kind of a normal market. Everybody's been, it's like our.
I was just thinking, is this a normal real estate
in
market?
In a way it is. In
Healthy
a way it
even.
isn't, because people don't feel like it's normal. People are very agitated about this market. But really, when you just look at the numbers, it's a little bit of a blah market. We're not setting records or anything, but it's not the worst market ever or anything. It's just kind of a blah market.
Yeah, interest rates aren't at 3%, so it's terrible.
Yeah, that's what everybody says, right?
I was thinking of a new dynamic, a way of presenting interest rates. We just call it the 3+ mechanism. So it's let's say your rate's 3%. Then it's listen, you got a 3+3 interest rate.
That's great.
Is that going to work psychologically?
That's great.
I'm sold.
And if we get down to 5.5, 3 + 2.5.
Awesome.
You're getting me a 2.5 now?
3 + 2.5. Yeah. How's that sound?
I'm back.
Take my money.
That going to work?
I've been sitting on the sidelines and waiting for that 3. You're going to get me a 2.5.
That's right.
So here's something that I don't. Here's something that I don't agree with. The analysis that was done is the inventory tale of two markets, and they say the balance of power between buyers and sellers is shifting differently between the counties. Miami-Dade County has officially entered a buyer's market territory with 6.2 months supply of inventory.
Okay,
right. This report claims that 5.5 is the difference between buyer market and seller market. We've always been trained 6 months, but things change over time. So we're basically in a buyer's market, sliding into a buyer's market for Dade. And conversely, Palm Beach County and Martin County and Broward County still lean towards the seller's market. Now, this is the part I think is funny. This is a report from the National Economist and everything, and they're using that number of 5.5 to be the difference. So Palm Beach is only 4.6 months of inventory, Martin 4.5 months of inventory, and Broward is 4.8 months. So they're saying that is leaning towards the seller's market, but in real world, it isn't. I'm telling you as an agent, in real world, it is definitely a neutral market. That's what I would say. In this market right now, you're not ahead if you're a buyer. You're not ahead of a seller. What's going to get the house sold or what the house is going to get bought for the buyer is they see value and that the price is correct, that the buyer wants to make the offer, and the buyer and the seller think it's a good deal between them. There's no really outside pressures of, well, I've got 6 offers behind me, so if you don't do what I want you to do, you know, I'm going to go on to these other people. And it isn't the buyer saying, hey, I'm the only buyer around for you.
Yeah.
And if you don't take my offer, you're never going to get another offer in months and months and months. So it isn't either one of those markets right now for most people.
What if we redefine it like anywhere between 4 and 8 months is a neutralish market?
I'm sorry?
4 and 8 months.
4 and 8 months to give that big wide slot. Yeah.
Neutralish, right? Because it kind of like you could say between 4 and 6, but 6 is the traditional. So with like between 5 and 7 maybe or something like that. That's a neutral market because it pretty much will feel that way for buyers and feel that way for sellers.
Well, the months of inventory, if we were in the 5s right now,
yeah,
I would say that we would be leaning a little bit towards the seller.
Because it's off of the 6.
Yeah, the 4.6.
Okay.
I still feel like the sellers don't have that much control of the market. I really don't. Now, case by case, you might have a killer house in a highly desirable neighborhood, and it's just like check mark, check mark, check mark. And you're going to be able to do really well in this market because somebody's looking for that type of house. Got to buy that house. But for most people, if you're not in that category, it's kind of a neutral market. As long as you price your house right, you're going to get the house sold.
And you can always tip the scales by having the premium house, right? Like the best looking, whatever, the curb appeal. Like you can, so I'm thinking like a seesaw, right? If you're sitting right on the middle, that's the 6 months. If you lean slight, but then you get the big heavy dude, you know, you got the real heavy, you know, you're gonna tip it in your favor, right?
Yes,
you are.
Yeah. Now, just to put that in perspective, Port St. Lucie had the lowest months of inventory I've ever seen, 0.9 at one point. I remember when we opened up live on the show that day, I went, wow, because I couldn't believe I saw less than 1 month inventory on the market. That was crazy town. Now it's not like that up in Port St. Lucie anymore. Yeah. They're seeing price values flattening out like everybody else. And now we're actually hearing of people not wanting to move to Port St. Lucie, but want to move to Indian River because it's cheaper there and they don't mind commuting. Have we heard that story before?
We have.
Right?
Yes.
Right. So that kind of stuff is interesting. Now, a couple other things about the market. Let's talk about the interest rates. The interest rates for the whole year. Mike, can you pull up? Because of where I am on my screen, would you mind putting up the Freddie Mac report?
Yep.
The Freddie Mac.
For anybody out there.
Not the Fannie Mae.
The report we watch, the chart we watch every single week.
Every single week.
It's Freddie Mac's primary mortgage market survey, the PMMS.
We've been doing this for the last 13 years?
Yeah. Oh. We look at this chart.
Same one?
They've got they started recording, I don't know, back in the 70s. And it doesn't mean that's your rate, guys. It just means this is the chart we use because they use the same metric to measure it, and it gives us a pulse of what's happening with mortgage rates, right? So yeah, last week, what do you want to know, Jim? Last week it was 6.16, and this week you guys all heard the headlines, right? Like, what was it, Jim? Rates?
It wasn't 6.1. It wasn't 6.1 last week.
6.16.
No, it wasn't.
Last week, 6. Are you looking at the 15-year?
It was nope. It was 6.07. You're looking at the week before.
So I mean,
2 weeks ago was 6.16. Last week it was 6.07. Now it's 6.06.
So it was 2 weeks. So let's define this. So we're talking about Thursday. This report comes out every Thursday. This very past
Thursday.
Thursday.
Look at the week change, Mike, on the chart. It says 0.01 week change. Oh, 0.1, not 0.01. 0.1. I'm sorry, he got it right.
So 6.16, and then this past Thursday, it was 6.06.
Now, what does that mean? That 6.06 is a milestone, guys. What's the milestone?
Lowest since
2022. Or
24.
24?
Yeah, we got down to
6.08. I know it was 6.08.
Oh, yeah, you're right. 6.09 in September 2024. So it's lower than that. So
yeah,
now we got to go all the way back.
No, 6.08.
Yeah, but we're at 6.06.
Oh.
Jim and I are really struggling.
I know we're having we're
violently
experts on
agreeing.
this.
I think on.
Oh no, here it is, 6.08. That was
so we're back
I
to
just got it.
2022.
Nope. Nope. September 26, 2024. We were 6.08.
Right, but it was at 6.06 now.
Right. So, I see. If you want to get to 0.6,
If you want to go lower,
well, you're talking
Yes.
milestones here.
Yeah.
So, 08 doesn't.
Yeah.
quite
What the
feel like
so
a
then
milestone.
that's exactly what people are saying,
2022.
that we have the lowest interest rate for 3 years.
Yeah.
Basically, we're at the low. Listen to this, people. We're at the lowest interest rate for 3 years
on this chart.
Yeah, but no, in real life
Yeah,
too,
true, sure.
right? Because this is the pulse.
Right.
So everybody's saying that they're waiting for an interest rate drop. Compared to a year ago, we were at 7.04, which is basically a 1 point drop to 606. So we already got a point off. Now, if you go back to November 2023, we were at 779. So we're 1 3/4 points less than November 2023. Hey, Mike, did you close any loans in November 2023?
Yeah.
Yeah, right?
Yeah.
People were buying because
Sure.
they had to buy, right? So people could even, not everybody, but people could still afford a home. Some people could still afford a home and bought at that interest rate. These interest rates are historically low right now, historically.
Oh, all time, sure.
Yeah, not you may compare to the old time, right?
Yeah.
But also over the 40-year period of
That's
7
what I
and
mean,
9.
all time.
Yes,
That's what I
we're
mean,
not
yeah.
even at that 7 and 9 that we saw for that 40-year trend. So it isn't about whether the interest rate's high or not. Can you afford the mortgage payment? That's really what it comes down to. People
Always.
are too focused on the interest rate and not on the what's my monthly mortgage payment going to be and can I afford that?
I just was talking to my stepson yesterday about, we were looking at this chart, and he kind of was like, it was interesting. Like, what's that mean? I said, well, this and this. He's like, oh, so what people, you got to wait for this to come down. And I'm like, so the same thing, same conversation we have almost every week on
With
here.
the young kid,
Yeah,
right? With
which
his
was
young
like,
kid.
no, you can't predict. Like, it's very difficult to predict. I can't tell you what it's going to look like next week, next month, next year. What it's about is getting into a payment that is comfortable for you, that you qualify for, and that's comfortable from budget perspective, and the house that you want. And if you can combine that, then it makes sense. And you're a buyer. I'm not telling you like, hey, go do this now because now's the time. No, I'm saying if it's the time for you and you can get these stars to align on the features of the house, the neighborhood, all of that, and a payment that's comfortable for you, then you buy. I mean, that's
And why wouldn't you? Because if you're renting and let's say you can afford a mortgage payment, if you can afford it, right? And you can pay rent, why would you do the rental thing? Unless I met a family just recently, they think they might be moving in 6 months.
okay.
They were interested in buying. They'd like to buy, but they're not
they gotta
sure
sell
what's
in
going to.
6 months.
Yeah, they might have to sell and move out of state or something.
I would say it doesn't matter what your interest rate is. That is absolutely irrelevant. The only question is, can you sell it for more in 6 months than you can right now?
Right.
And it's like,
yeah, no.
Are you crazy?
Yeah.
There's no way to predict that.
So we were like, I don't think this is a good thing. Maybe you should rent, find out if you're really going to move or not. If you find out you're not going to move, let's get back into the buyer pool again. Or I can help you in another state or area to help you buy up there.
Or if you happen to just have this crystal ball and you say, I'm waiting because I know it's going to get better in this time frame. It's going to get rates, price, home price. Those two things have to move at the same time. You need home prices to get better or stay the same, and you need rates to get better or stay the same.
You can't make. I don't know how that's going to happen. I just don't see it. So one or two things are going to happen. Well, one of three things. We're going to stay this way, and we'll have a malaise, and we'll just be kind of chugging along here. Everybody frustrated.
I feel most likely.
We might see a huge increase. I'm sorry, we might see a huge increase.
Yeah.
That could happen. Or we might see, another big event, that's really going to hurt the real estate market. If the big event happens, what I've been reading about, we need about another 15% haircut from where we are now
on prices
to make it affordable based on the current interest rates of 6%, like 6.0.
Well, that's the question. So if we see that, our rate's going to get better or worse. Like, we need both of those things to happen for these people who are waiting to then perhaps. But then when you get that, Johnny, then do you pull the trigger or do you wait a little bit more?
I would say pull the trigger whenever that number coincides to where you're comfortable. And again, focusing on interest rates is absurd.
And it's what's really like, and we'd say this, it's almost broken record territory. And I don't know if people get tired of this message from me specifically, but it's basically, if you want to be in that game, like where you're waiting for the stars to align, you better be ready to pull the trigger when that target presents itself, right? So that means you have gone through the pre-approval process. You've talked to your buyer's agent. You know what you're looking for. You're getting pinged on homes that fit your criteria. You have some way of analyzing numbers, because really what you're waiting for is not a rate. It's not a payment. I mean, it's a payment, right? It's not a rate. It's not a price. It's a payment. And the house that works,
that has
right?
to happen too.
That has to happen too. So if you want to get the timing right on that, you got to be watching. You have to be actively kind of monitoring the situation and know your numbers, so you can do the number analysis and have talked to an agent, so you're getting pinged on homes that fit the bill.
Absolutely. I want to talk just very briefly about what's going to happen next year, what people are this year as we come across. But let's go ahead and take the call. They've been very patient. I didn't see the person there. I'm sorry.
That's all right. We have John on hold. John was listening earlier when Ross was talking about making sure that you have enough insurance to cover replacement costs, and it caught John's ear. So he wanted to chime in on that subject. John, welcome to Florida Talk Real Estate.
Hey guys, it's good to hear your voice. A lot of the regulars are in there today. It's good to hear you all, and I wish you Happy New Year. The things that Ross was talking about was informative to me. I was on Citizens as well as my father. I think Ross handles my dad's policy, and we both got bumped to other companies. But it's like the insurance. I get the policy and it's put away. I don't even look to see what the rebuild value ratio is, and that was very informative. I'm on my way home now. I'm going to go check and see what that looks like, because I actually got a good break. My house was paid for, so I only have fire and theft and no hurricane on there. I was paying about $17. They dropped it down to $1,000.
Nice.
But I'm curious now to what it is as far as the rebuild value, as far as percentage wise. So, but
where will that say it on the deck page? Is it really spelled out pretty painfully obvious, Ross?
It'll be listed as coverage A or dwelling coverage.
Dwelling or coverage A.
Mm-hmm.
What if you have
and
both?
It's going to be the same thing. It's going to be that top.
redundant.
It's going to be it should be the biggest number
Oh,
at the top. Yeah.
Gotcha.
It'll be
Not
the
per
top
cost,
number.
but the coverages.
Gotcha.
Yeah.
Dwelling or
I
coverage A.
Yeah.
I mean, I just never, it's one of those things, like, if you're not in the business, sometimes you don't look at it. I mean, I'm not like my father-in-law. My father-in-law knows the numbers of everything. I'm just looking at the dollar value a lot of times, and so I'm really gonna have to take a look at that. But the other thing I wanted to say was, you guys are talking about the interest rates and how things are a little bit slow call-wise, which, I feel for you guys, because I love listening to you on Saturday. But, for me, interest rates, when they're at like 5 or 6, my first house that I bought, it was 12%.
Mm-hmm.
And then we refinanced it down to 7.5%. We thought we were making a killing. And then our next house, we got down to 3.75. But I mean, I think it's more what you just said. The cost of the homes is just jumped so much in the last 20 years, in my mind.
That's
That's great news for homeowners.
Well, it is, but John is exactly right. And this is kind of coming in. So John, stay on the air. It's kind of talking about coming up through this year, right? So last year, or when I was looking at the property tax increases for a lot of neighborhoods, and there's a really big trend there. What I was showing is that 22 and 23, people's homes were being assessed valued at between 20 and 30% more than the year before. So between 22 and 23 compared to 21, 22 and 23, by the end of 23, people's homes were assessed at 50% more in value than they were 2 years earlier. That's unsustainable.
That's crazy.
That's a bubble, right? That's unrealistic expansion of your value. So when that happens, you have to expect to have a retraction. Now, not a crash. I'm not talking about a crash. But people are going to need to take a little bit of a haircut to keep this economy, the real estate economy, moving forward, chugging along. It's just out of sync with each other. And we did see that 24, it started flattening out. And then 25, there's a lot of neighborhoods where the property appraisers are assessing the homes at 0% increase in value, or actually negative % decrease in value. So we are seeing it flatten out, but the increases that we had in 22 and 23, totally unsustainable and really not justified in my mind.
Yeah, and for me, I think a big part of it is apprehension as far as where the economy is going to go, or just uncertainty of what's going to happen in the next year. I mean, I have my own business. I've been in trucking all my life, and I'm still doing it. But I see it on the road a lot of times before other people don't. And just the thing where at nighttime, if you wanted to park your truck, the rest areas are truck stops. If the economy's good, you can't find a parking space. But now at midnight, 1 o'clock, plenty of parking spaces. In my mind, that tells me the freight's not moving, which is really what is the sign of the economy in my mind.
Yeah, that's a really good point, John.
That's a cool indicator.
Yeah, I love that little indicator, because I ask some people that are in the development world that service developers, like with supplies. I always ask them, hey, are they ordering a lot right now, or are they slowing down on their orders? This is another good metric. Is the trucks full or not, like at night, where, because they're not trucking enough.
No, we don't want Jimmy to get caught prowling
Hanging out
the
at the
truck stops doing his economic research.
$20. Hey,
Well,
John,
it's it reminds me, Jim, of when we had the guy who does the real estate signs, like the for sale, and how many he's dropping off.
Yeah,
versus
Seth,
picking up.
Seth from Virtuals One
Right? It's
Photography.
kind of like a stat like that. It's like a little bit, oddball stat, but does it really give you a pulse of what's happening in the market?
A little
Right,
bit.
good point.
Little bit.
Well, John, I hope you have a happy New Year. Safe travels on those roads. I have a lot of truckers that we work with, so I know what you guys do.
All right, good to hear all your voices, and I always appreciate your show every weekend.
Thank you
very
so much.
Thanks for tuning in. Always appreciate you. 877-927-6969 if you'd like to join the program. Short amount of time remaining. I got about 15 minutes, but you're more than welcome to join us. Of course, if you're not comfortable on the radio, always remember FloridaTalkRealEstate.com. FloridaTalkRealEstate.com. Your one-stop real estate shop. Access to the entire team. Get them all. FloridaTalkRealEstate.com.
So, Mike, we got about 10 minutes left. Do you mind if we go into the Fannie Mae, Freddie Mac? You don't need a credit score anymore?
Sure.
Mind? Okay, let me just start it off. Hold on. Let me just set the foundation here.
So
okay.
yeah, if this happens, this is the beginning of the end. Yeah, this is how we crash again.
So this was a big thing. This was a really big thing. I've been getting a lot of calls about this, about people saying, is it true that you don't need to have that the credit score doesn't matter anymore when you get a loan? This could be a very big thing for people, but it says that, if you've been sitting on the sidelines because you think your credit score isn't perfect enough to buy a home, and we have a lot of people like that. I need to get a higher credit score, and I'm like, do you have 620?
Well, by the way, what is it? Do you know it?
Yeah, do you even know what your credit score is, right?
Just your credit card telling
but
you.
all these people are sitting around waiting for the perfect credit score, and now, does it matter as much as matter anymore? For 30 years, the mortgage industry has used the same system to determine if you're worthy of loan. And what they normally looked at is how you pay back your debt, like the stuff that you owe. But now they're opening it up to include other things that you do to buy things, like maybe your rent or utility bills or other things, car payments maybe, that show that you have a payment history, but it's not what was looked at traditionally. So a lot of people took all of this to mean that Fannie Mae and Freddie Mac have now decided that credit score doesn't matter as much. Mike, what is the real truth? What is this like in the real world? And is there any truth to this, and what's not true, and what's kind of BS in there, and what's true?
It's definitely true that they no longer have a minimum credit score requirement. So it was 620. If you had a credit score below 620, you couldn't do a conventional Fannie Freddie loan. Okay. And it's interesting, Johnny's reaction, which is, oh, great, here we go. Loans for anybody. This is the beginning, the sign, the Armageddon.
Yeah, but we're doing conventional. So this is 20% down. If you got skin in the game.
No, you could do 3% down conventional.
Oh,
another myth.
That's
conventional
the
loans.
That's the worry.
You could do low down payment.
We start sliding people that shouldn't be in a loan into loans.
So I think the perception is, okay, there's no minimum credit score. does that equal I can have terrible credit? Or maybe I don't, they're not analyzing my credit anymore. That's not the case. We're still looking at your credit. There's just no minimum score. So you still have a chance of getting approved for financing if your credit, is 520 or 450 or whatever it is. Like they just, you're no longer
really though.
You're no longer eliminated simply because of the score. But the way that this works is, so for years and years, we have been using computer software called automated underwriting systems, or AUS. Fannie Mae has desktop underwriter, or DU. Freddie Mac has loan prospector, or LP. Right? If you're in this world, an agent, DU, LP. You've heard those before.
Sure. They're all the same thing, though, essentially, right?
The software is about analyzing your how well do you meet the underwriting guidelines, right? And so basically you have a loan application. That loan application has information on it, such as your name, your birthday, your social. It kind of takes the information on the application, your income, and based on the details in the application and a review of your credit profile, it says whether you're going to get approved or not. And then the physical underwriting process is just making sure that application is accurate, right? So we get your pay stubs and your tax returns and your W-2s so we can calculate your income accurately. So the number that's on that section of the application is correct. So DU and LP aren't analyzing the data itself. They're assuming the data that's put in there is correct, right? But part of that is a credit analysis. And so they're looking not just at your score, they're looking at credit history. They're looking at, do you have a bunch of collections? What's the cumulative balance on those collections? Do you have a history of poor repayment of loans? So you have late payments. So do you have a late payment on your mortgage in the last 12 months? That's almost going to always eliminate you from contention, right? So the credit analysis is still happening. They're just not automatically eliminating you because you're below 620. Okay, now why are you below 620? That's where your problem's going to come in.
Well,
right?
what I don't get is how you can be below 620 and still be approved for a loan, because the 620 is a reflection of your payment.
What if I'm doing 50% down, Jim?
Oh, I see what you're saying. Okay.
So there's other like risk factors. So the accumulation of risk factors is a problem. If you only have one risk factor, which is like super, poor credit history, but you have a lot of strengths in your file, right? Big down payment. Maybe your debt to income is really low, right? So I make a lot of money. I got a big down payment, but yeah, you know what? I messed around 3 years ago and I didn't pay back all these bills that I was supposed to pay. Had my car repoed, whatever, right? So it's kind of like, think about like when you're applying for college, right? Let's say you just have a very poor GPA, but your essay is excellent. You have recommendations from all your teachers. You know what I mean? And maybe your dad's an alumni, or your mom, or whatever, right? Like there's these things that they're going to look at that are kind of going to outweigh this negative factor. So it is not a slam dunk you're going to get a loan, right? The credit history is still important because, you're borrowing a ton of money. They want to make sure you're going to pay it back. And I kind of concluded last week saying, listen, if you don't pay your bills, it's going to be a hard time getting a mortgage, right? If you just have a history of borrowing money, using credit and not paying it back, you're going to have a hard time getting a loan for a home. But if you're let's say not only you have a poor GPA, maybe there's somebody who just never went to school. I don't have a report card. I don't have a GPA. I just never went to school. Okay. We're going to look at non-traditional credit. Things like, do you pay your rent? Do you pay your utilities? Show it. And they've kind of always had this non-traditional credit analysis. It's difficult. It's more work for underwriting or whatever, but it's kind of always been there. So the big headline is you no longer have to have a 620 score or better. The reality is there's still credit analysis. If you don't pay your bills, it's still going to have a hard time. It's still going to have a hard time getting a mortgage.
So if you've been denied a loan because of the credit score number, or you're worried about your credit score, you got to give us a call, because we're going to get you to Mike and see if there's other ways to deal with that issue to fix it for you so that you can get to where you want to go. We're just one phone call away.
And guess what? You need to be working with the loan originator who's actually familiar with DU and LP, who knows how to run them, not later in the game. They're always run after you're an application and you're like doing your underwriting process, but you can also run them beforehand. You want to run them with accurate information, of course. So I do need to get your income dialed in, because if any major changes are going to change that analysis. But you need to be working with somebody who's familiar with those tools, who has access to use them and really understands that part, the part of the pre-approval. And of course, the pre-approval is like, it's got to be rock solid, because you do that And we encourage you to do it as a first step. You do that before you're looking at homes. You do that maybe even before you do your sit down buyer's consultation, because we got to know where you stand. You need a loan. We got to make sure you're going to get approved, and also what the limits are on that approval. We do that early in the game, but with confidence, right? We have to know what we're doing, because we don't want to get you into it. You're spending time, energy, looking at homes, finding the right home, falling in love with it, making an offer, negotiating, paying for inspections, paying for appraisals. And then we got an underwriting problem because I didn't do my job properly up front. Right. So it's critical that the LO, the loan originator professional you're working with, knows what he's doing, especially in these times where there's like options. Like, hey, it's not just about credit score. It's about a bunch of factors.
And thank you for filling all that information in, because just the surface of bad credit, get a loan, like, to me, that's we're back to fog a mirror, get a loan kind of world.
Sure.
And but it's not even close to that. They're just saying, hey, this isn't your biggest hurdle. I think the biggest hurdle for most folks is cash.
Yep. I think that this is another reason that the Feds, the national economists, are thinking that sales are going to increase, is that opening up these things that have blocked people, they were thinking that's part of the 10 to 15% increase in sales this year.
Yeah,
are these kind of things?
Cash would help.
Let's go ahead and take the call, and if we have time, we'll get back to the subject.
Okay.
What do you got there, Jimothy?
We have Pam on the line. Pam has a question about short sales or foreclosure. Pam, welcome to Florida Talk Real
Are you
Estate.
saying Pam or Pan?
Pam.
Pam?
Oh, it's a silent
Pan.
M. It's a silent
Pan.
M. Gotcha.
Step Brothers.
Step Brothers reference. That's right. Yes.
Okay.
Jimmy didn't get it.
No, I think I can step in on the Pan situation.
Stop it, guys.
How are you doing today?
I'm doing all right. Pamela Paris is my name.
Oh, yeah, I know who you are. How are you doing, Pam?
I'm doing great.
Good,
Thanks.
good.
Still waiting for your call. Listen, I ran across something. I can't find this senior real estate specialist certification anywhere. So if you know anything, and I've tried Florida Realtors, I've tried my board, I've tried all kinds of different schools, and nobody's offering it, but I need it. But my question really is, I have a client who's coming up. It's a poor woman who's had a real hardship. She's 6 months behind her mortgage. The bank's threatening foreclosure. So, she wants me to take the bull by the reins here, but she's got a will, and I haven't seen it yet, but apparently there's an executor that's her son. I want to negotiate with the bank for a short sale. Can you guys give me any tips on this?
Okay, so have you done?
I can't give legal advice.
Right. Have you done short sale? Have you done short sale negotiations with the bank before?
No, I have not.
Okay, so this is what I'm going to recommend, Pamela. I'm going to really recommend this. You really should go to the law office of Paola and Krasker to handle the short sale. So I have a system.
Okay.
So if we ever turn into a big short sale, loan mod, foreclosure crisis again, we're going to turn on all those engines because they're all sitting in our wings waiting to go. We can help people with loan mods, bankruptcy, foreclosure defense, but you can too as a realtor. All you got to do is plug into the people I've already created and then just use them for your own team. So when I used to do short sales all the time, I would hire the law office of Paola Krasker. They have a subdivision called short sale negotiations and innovations. I'm sorry. What did I say? Negotiations. Innovations. I'm sorry, Paul. And what that group does is they're in the law office and they will negotiate totally all the paperwork and everything with the lender to try to get the short sale done. Now, when we were doing this back when we were on the telethons and all that on WTP-TV during the crisis, the national average for acceptance for short sales was in the 60% range. We were in the 90% range because having those professionals behind us, they don't charge anything. They don't charge anything to you, Pam, as the agent. They may or may not charge the customer. A lot of times they can't legally. It depends on the type of loan they have. So if they can't charge, they won't charge, and they get the money from the bank for the negotiations. And then that way you don't have the legal liability. One of the things you have to worry about as an agent, if you're doing a short sale, is that if the owner ever feels like you didn't do the short sale correctly, they can actually come and sue you saying that you caused them to lose the house, even though most times that's ridiculous. But they're desperate and they're going to want to blame somebody. Take that responsibility off of you. Have a professional do it. And we can get you to short sale innovations in the law office of Paola Krasker.
And I was going to say, Pam, and Jim has a lot of experience with this. And I think in a nutshell, he's saying, call Paul. because Paul is going to be able to do it. But they also, if they're threatening foreclosure, that is a very short step away from actual foreclosure, where foreclosure defense may be needed. Of course, Paul's office specializes in that. They also specialize in estate planning stuff. And so if there's a question of who's in charge and who's making decisions, they'll be able to get to the bottom of that. So like all three of your potential problems are solved with a call to Paul's office. Of course, they charge for their services, but who's paying for it?
Well, it's
Jim?
free consultation to find out how to map out the plan. That's all free.
Yeah.
And then you figure it out. And most of the time, it depends. Like if you're doing a short sale, usually there's not really a fee involved. When we were doing them back in the day when there were a million short sales out there, right? We've had, I counted it. We had like 15 short sales and foreclosures close in the 5 counties last month in December.
Yeah.
I mean, it's almost non-existent. I just did a loan mod recently, Pam, for one of my customers and got them into a loan mod. So it's still out there. There's still a need for people. So if you do need that information, I'm sure you gave Jim the information, but I got you in my database. If you want Paul's stuff, I'll get you over to Paul and you can talk to him. Okay, great.
I do. Yeah, thanks. And one more question. How long is the average wait when the bank threatens you? You said they're on the way to take it away. I've seen houses sit for 6 or 8 months before the bank comes get.
Well, the lady I just did a loan mod for, she hadn't made a payment in over 4 years. So the bank never foreclosed. Yeah. Now they threatened to foreclose, but they didn't. So it's very different than the old market. So we don't know when they're going to do it, but legally on the 91st day of missed payments, the bank is allowed to start the foreclosure process, and then they serve you, and that's called a list pendants. So you got to ask your customer, have you been served with the list pendants yet? You've been actually served, and have you been avoiding them? Because you do not want to avoid the bank. The not getting served does not slow down any foreclosure. You've got to take the bull by the horns and start talking to the bank. Hey, we know we're in trouble. We're trying to create a plan to solve this. Will you do a short sale? Will you give relocation assistance to my seller since they're not making any money?
You can also do a search of the public records. So, right, like court records for the county, the civil court records, you can see if there's an open file. So just search for your borrower's last name and see if there's a case active, and you'll see if it's a foreclosure case. And that way, you know, it's progressed beyond threats of foreclosure. They actually filed a suit. So you can look at that, but you know, a call to a law office that handles this stuff, I guess doesn't have to be Paul, but Paul's really great at it.
Why wouldn't you?
Yeah,
I mean,
why
they
wouldn't
do the
you?
whole state.
Yeah,
it's crazy.
But yeah, one call should put you on the right path.
Paul's number on realtor.com. I mean, Florida realestate.com. Where's Paul's number, please?
Yeah, I don't have it on air. If you could just reach out, I'm going to call you on Monday, Pam. I'm going to get you all the information, I promise, because I know who you are and I know you're in my database. So we'll get you over to Paul. It's the weekend anyway. You're not going to get him until at least Monday. And I want to introduce you to Paul.
Monday's a holiday, too.
Oh, yeah, that's true. It's probably not going to be Monday.
Thanks so much, guys.
Thank you, Pam.
Appreciate you listening. And of course, always remember FloridaTalkRealEstate.com. When you need a pro's pro, we got them all for you at FloridaTalkRealEstate.com. Got about a minute and a half remaining.
Yeah, I'm hoping that this doesn't become the trend, but we start to become going back to 2012 for real.
Yeah, were you knocking on wood when you said if this, like, we're ready if it happens? Were you knocking on wood?
Yeah, I don't want it to happen. I do not
absolutely
want it to happen.
not.
That's a miserable time for people. I do not want that to happen. I
mean, you helped so many people.
I'll do fine, and I'll probably do better than I'm doing now.
Yeah. You helped so many people, but you helped them out of a thing, and the resolution was oftentimes like having to move. Right?
No,
you saved a lot of homes.
Way more.
Yeah, sure.
You weren't on the show at the beginning. For every short sale we did, we probably did 5 loan mods.
Okay.
So most
People
of the houses we
stayed in
saved.
Yeah.
You weren't coming. We were literally asking you, do you want to save your house or sell your house? And whatever you wanted, that's what we did.
Yeah, I think predominantly most people wanted to save it.
Yeah, wanted to save it. So we tried to save it.
You know what we didn't get to today, Jim, was
Nothing.
the proposed
Everything.
property tax.
I know.
Stuff.
So next week, we're going to talk about this new HR Bill 203. Very big news. They're trying to eliminate the property taxes for homestead for over the next 10 years. Imagine 10 years from now, you get no non-valorem ad. Is it the non-valorem or the valorem ad tax?
It's the ad valorem.
Ad valorem.
And it won't be none because they want to preserve school and police. And
But
fire
it would
and stuff,
reduce your tax bill by 55% for homesteaded people.
That's huge.
Yeah, that is huge. So we're going to talk about that next week.
All right. We always have great information for you every Saturday and try to throw in a little entertainment. Hopefully you get a nice dose of both.
Do you have a word for that?
Infotainment.
Oh, nice.
Yeah,
Nice.
seems to work out.
Nice.
I don't know. I don't think it's going to stay.
I like
though.
infotainment.
I don't think it's going to stay. I've tried. I tried to dub the heaters years ago.
Oh,
I
yeah.
got one guy saying it,
Nice.
and it's Greek.
What about
I've heard
the
it from nobody else?
one that stuck around? I don't know if I invented it or not, but the cowgirls. I just made Johnny speechless.
Yeah,
Okay.
no, I think it has caught on. I've heard that a lot. I've tried to keep the skins alive, like calling them the foreskins,
Yeah.
and just give everybody the pass. Be like, you can still call them skins. It's the foreskins, and I don't know. It doesn't.
At the fair later.
It's not cold enough for me anymore. We're flat out of time. Always remember FloridaTalkRealEstate.com. Know it, use it, love it, share it. Thanks for being out there, tuning in on Facebook, Consume Away on YouTube as well. Mike Rao, the mortgage guy from the mortgage firm. Have a great weekend.
Yep, you too, man. Thank you.
And enjoy the football if you get you some.
Oh, yeah.
Get some. Ross Komarinetz with Brightway Insurance, Juno Beach. I hope you have an excellent weekend as well.
Thank you. I'm going to do my best. I hope you do too.
I'm going to give it my best effort for sure. No, I can't promise you like an awesome outcome.
As long as you try your best.
I will do that.
That's all that
I
matters.
will do that. Jimmy D, there's Jim DePola with the Florida Home Pros team. Will you do your best?
I will try. Happy South Florida, everybody. I got a very busy day.
Excellent.
Very busy.
Good luck. Enjoy your Sunday when you get to it. Jimothy, thanks for everything always.
Have a great weekend, gentlemen. Good to see you.
You have a great weekend as well. I know he's going to give a top effort. Locker room's next. Hopefully you're planning on sticking around. We're going to squeeze out a sports show. Me and G-Man. We'll be back next Saturday. 2 hours of infotainment, Florida Talk Real Estate style, right here on Real Radio.